Welcome. Thanks for coming. This is the Prospect Generator panel. They've just cut us down by 5 minutes. So I'm going to take the assumption right off the bat that you all know what the Prospect Generator business model is and get into it. What I'd like to have you three do is just real briefly give us some background as to how you ended up where you are and that sort of thing. We'll start with Joe Kizis from Bravada.
Yes, I'm in it. Am I speaking loud enough? Okay. Yeah, I'm an exploration geologist. I've been in business for about 40 years now, much of that time in Nevada. And so I've worked for a lot of the large major companies and decided it was a lot more fun to work for juniors. And about 2005, started working with junior companies, and we've had the fortunate case to be associated with a number of discoveries. So Bravada is a company that focuses on Nevada. We're focused on early stage projects in a district that's quite advanced, and so we're not looking for things sticking out of the ground. We're looking for geologic ideas that can develop into large-sized deposits.
Jean-Marc.
Hi, I'm Jean-Marc Staude. I'm the president of Riverside Resources. I'm a geologist, and similarly, 30 years ago, went to Mexico as a translator in college and started to compile data about Mexico. That became my doctorate in it. And then I created Riverside after I left BHP and Magma and Tech to generate projects out of that database and knowledge. And what we do is we get partners to then come and test those ideas.
Thank you. Can you all hear? Okay. Doug.
Okay, and I'm Doug Eaton. I'm the president and CEO of Strategic Metals. We focus on Yukon. We're very well funded, got about 100 active projects. I've been in the industry for 47 years, all of it in Yukon, and fortunate to work with a consulting group that has had quite a bit of success and has probably the largest private geologic library in probably the province of British Columbia, if not Western Canada. Thank you.
And it is an amazing library. I've been up there and looked at it. So let's get into exploration and philosophy, and I'll just jump to you, Doug. Just philosophically, how do you decide what to look for? What are your screening criteria, that sort of thing?
Okay, it's fundamentally you have to be nimble. You have to keep ahead of the trends. Look for commodities that are coming up. Don't get fixated on maybe ones that don't have much motion. Try to look for ones that are big enough to be major discoveries. That's really the name of the game. Don't get too in love with high grade. High grade is wonderful, but if it doesn't have size, you're dead.
Jean-Marc, same thing.
Similarly, look for accessibility too. We look for things that you can get into, you can test near the surface, that can make a very quick run and then can go much bigger. Things that are, at the end of the day, will be worth billions of dollars, so it's worth the risk you take on. Looking for big plays in easy access places makes for a really fast chance to discover.
Joe.
Yeah, we're looking for projects where we can acquire something that we think will be a major discovery, something that if we end up as a partner, a junior partner at 30% is significant. You don't want to be a partner of a small mine, so we look for projects that I would as if I were working for one of the largest companies again, and we look for those projects where we see a clear path to upgrade the quality of that project. So no sense taking a project if the work that we can do doesn't advance it. So we look for good deals on projects that can become large deposits and methods that we can find the big discovery.
So what I'm hearing, and this is the key to the Prospect Generator business model, is they're actually working, their clients are the major mining companies. So they've got it, and they've got the experience. They've got the experience to know what they need, and it's big, good access, good logistics, the right country. So you're looking to sell something or bring a major partner in to explore that. So that's what they need. So I guess the next point, at what point do you cut bait? How do you make that decision? Because too many of these companies, in my view, don't know when to cut bait, and they keep burning and burning and burning. How would you or the audience decide what to cut bait on or when? I'll go with you, Doug.
Well, one of the most important criteria is the holding cost. we fundamentally, we refuse to option properties. I've never been able to option properties from a prospector, advance them, and make a profit. So everything we have is wholly owned. So when the holding costs become prohibitive, if the exploration results haven't been particularly encouraging, you just got to get out. You can't afford to continue throwing dollars in, but you can't get into advanced exploration that costs too much money so that you've made major investments that you have to try to recapture.
John Mark, what's your criteria? When do you know, how do you know, and when will they know when to cut bait on a project?
For us, we're really going after the unanswered question. What's really going to be big size? So as the results continue to be better and the places that we can fundamentally add value without getting into our treasury too deep, as it gets more expensive, as the targets get deeper, or as they become higher risk, then we put them out. So we actually do a little calculation of an expected net present value. What's the value of the next step, and how much it's going to cost? And when the risks keep going up, we immediately look for a partner to carry those risks so we don't sink our company.
Same to you, Joe.
It's the same story here. We look for properties that are going to be large enough for one of the major companies to come in and take over. We're doing the R&D for the large companies. So if it appears that the discovery is not going to be of that quality, then why keep it, right? There are
That
other.
makes good sense. How about, I wrote down here, a couple of lessons learned, mistakes you've made and learned from, and maybe as an advice to the investors out here. Joe.
Oh, well, I guess the one thing that most geologists will fall in love with their projects. So there's always my job to keep the project people that we have on the ground clear that our goal is a major discovery. And, you may love it, you may come up with different ideas, but if those ideas then bring you to a deposit that's not going to be of value, of significance to the company, then there's no reason to continue with that project.
John Mark, since you started in this prospect generator junior mining company, how about something you've learned from that we all could learn from?
Really to pay attention to your local community. We have been able to be really important to work with them, have the continuity with your local staff and team, and teach them that their first job is access, not necessarily getting that outcrop sample. Being respectful for those local people has been a breakthrough for us. It's given us the longevity, and what we've seen is that other people didn't do that. They paid way too much, and they effed it up.
Doug, same thing.
Well, I'd echo what both of my partners or my co-panelists have said, but the one thing I would also keep in mind is that you have to be flexible. A deal that worked in one cycle or a commodity that worked in one cycle isn't necessarily going to work in the next one. You've got to constantly be looking for a new way to make money for your investors and to build a company.
What's the disadvantage, or what is one of the problems that you have as a prospect generator bringing partners in, Doug? Like what in your contracts, or what do you have to be aware of so that the deal works for both of you?
Because our job is managing risk, one of the key things that we have to do is make sure that we're giving enough blue sky to the parties that are coming in and making the very large expenditures at the drill stage and to move the project forward. We've got to make sure that they're incentivized to do it. From our side, what we've got to make sure is we get enough off the table in the first year or 2 years to at least get back the money we put into that project and ideally turn a profit and keep a good sliver of blue pie for my investors, or blue sky for my investors. You've got to make sure that there's a balance, because if it's a good deal for one side or a great deal for one side, it probably isn't a good deal for the other side, and you'll have problem moving your product or keeping partners.
Let me stick with you, Doug, because you've been doing this longer than anyone. How has strategic done over the years in terms of money out, money in, and success? Because I think you've done quite well.
Yeah, not very long ago, I was at an investor conference in New York, and a fellow came up who's a fund manager, and he said, "What's your annualized rate of return?" And I looked at him, and seriously, I started laughing. And I said, nobody's ever asked me that question. We're a junior money company. Our stock goes up and down all the time. But he said, "No, how have you done over time?" He said, "According to my calculation, you beat the Dow Jones." And it's true. If you go back, and we're building a company, and there's been enormous fluctuation, but if you go back to when we adopted the generative cycle, or the generative model, and to where we are today, we've had fantastic annualized returns, and we've been able to develop or to return dividends to our shareholders and still have built more properties and have more cash on hand than we've ever had at any time pretty much in our future. So today we have $15 million in the treasury. We have about $20 million worth of shares of other companies. And we've got over 100 mineral projects with years of assessment built up on them. We're building a company for the future.
When did you start Strategic?
The company was formed in 1996, but was reformed and restructured in 2005. That's when Rick Rule convinced me that the database was invaluable and to focus on project generation.
Good. John Mark, same two questions actually. When you're making deals with companies, what is it that you've got to be aware of? And then walk me through how you've done since you started this Riverside.
Then one of the things you have to worry about is that they think they own the project already, and spending and how much money it costs to run the project. So we operate all the projects so we can stay on top of those expenditures and not actually get drained because we have them funding the project. So first off is watching the capital spend on the projects and not letting the other guys come in and mess up or make over obligations. So operatorship in Mexico, where we go, is vital. The second thing in terms of expenditure, we haven't done as well as Doug, but likewise, we've been able to have $64 million spent on our projects. We've actually gone through 44 projects. We actually only have 44 million shares. So as you walk around these booths here, who's been able to evaluate a project for less than 1 million shares dilution? We've generated 10 of those projects that we carry forward for royalties. So that's been an amazing return for our investors, 64 million. Riverside's only raised 18 million ourselves. So we've been able to get a 2.5 to 1 ratio and be able to generate all those royalties without actually ever buying anything.
What's your market cap and how much cash have you got now?
So our market cap is now $15 million, and we have $3.5 million of cash, and we have another $3 million in equities of other companies.
And you're profitable? You make a profit?
We generally have made a profit at different years. It really follows the market. When the market's really hot, we're doing well. This past year, we were not profitable. We lost $1 million last year, but often we've been profitable is a prospect generator, yes. If we weren't public, we'd be very profitable, but keeping up and paying for all the other parts of it's one of the costs and one of the things that provides you as shareholders the opportunity.
All right, Joe, same question you done? And any ideas on what to watch for in structuring deals?
Sure. For deals, the biggest issue is that companies, especially larger companies, are very slow in doing the work. And so, there is a requirement that work gets done, that we get the data on a regular basis so that we don't just get handed a box of data at the end if they decide to turn it back to us. And so those are some of the key issues. I don't insist that we're the operator. It's a two-edged sword. By the time you do that, you end up sort of being a consultant to the company. But I do want to be involved with the decisions, the results as they come out, and basically provide the company with free exploration. Now, we will run projects for companies if that's what they require. I'm happy to do that. So what we're trying to do is build assets, and so for a small market cap of, $7.5–8 million, we have about 1 million ounces of gold. So, we've been successful in taking on projects, and especially from some of the majors, and taking a quick, very detailed look at it, trying to look at the property. Okay, this was in production, it's not in production now. Is there still exploration potential? And a lot of old exploration projects, I think, are the most fascinating. So if you can do a deal with some of the major companies and structure it so we actually get a benefit if we're successful, that's a great way to go. We've done that with our Wind Mountain project, Quito. These are old mines. We've looked at them. Typically, once it gets into production, the exploration geologists for that company are not welcome on the property anymore. So there's lots of really cool data that's available, and gives us the opportunity to take those on. And if we're successful and our theories of what the mineralization should still remain are successful, then we gain and add ounces very quickly.
All right, great. If I'm going to summarize here, this is. I hope you caught on here that not once did we talk about an individual project, didn't throw out the geology, the ounces per ton or whatever. We're talking about a business model where these fellas, geologists all, are generating ideas and bringing people in. And the key and the big advantage to this business model, in my view, is not the individual project. It's that to make a real discovery, it takes time. You need the time to burn through the projects, and eventually something comes up that keeps getting better. As an investor in this thing, that's what you want to be in, is when they do make that discovery, the share count is low and you haven't been diluted out of the company. So that, to me, is the real advantage to this company. It's the business model and the guys behind it and gals behind it that are turning up the ideas that major mining companies will come in and put their money into and intelligence into. So I guess our time's about up. If you got a booth, you're speaking later today, let us know. Joe?
Yeah, I don't have another speaking engagement, but I'm in booth 334, which is just up ahead here a little bit, right outside the door.
We're in booth 818, and I'm also at the Roundup. We're in the Core Shack. We're also at the Map Tent. Technically, we have a lot of meetings on the side because geologists, lots of projects.
I'll be at 327 for the rest of the day. Unfortunately, I've got a ton of meetings the next few days that relate to our business model, so I won't be around tomorrow, but if anyone wants to drop by the booth and give me contact information, I'll be sure to get a hold of you.
And I don't know if I didn't introduce myself. I'm Brent Cook, Exploration Insights. There's two of us, Joe Mazundrai and I. I'll be speaking tomorrow, I think at 1 o'clock, and I've got a few other things going on. Our newsletters about what we're actually buying, selling, and seeing in the market. That's it. Thank you all for coming, and good luck this year, eh?
Brent, and I'd like to give Brent a testimonial too. I'm a subscriber to the newsletter. It's awesome. I've made a lot of money and really like it a lot. I do recommend it. It's a really good newsletter. Thank you, Brent.
Thanks.